Good morning, Hex fam. I am going to do a chart set video for the chart set as of March 16th, 2001. I'm just going to go on ahead and go right into it. Alright, disclaimer: the information displayed in this broadcast is known to cause increased amounts of FOMO. Wells only and his guests, just by myself for the chart sets, are not responsible for any losses you may accrue for having weak hands. Stake accordingly. All right, so here we have the first 457 days live of returns for Hex, and as highlighted up here in the upper right hand corner in magenta, Hex is currently at 223% post big payday. That was November 19th, 2020, and on that date, all of the inflation that was in the system during the launch phase was released, thereby essentially giving you all of the halvings that you would have in Bitcoin all at once. In terms of the systemic inflation, not the user generated inflation. And as we can see here, the the yellow line with the blue hue, which is Bitcoin, is still not showing any activity, given that its first live network transaction happened on May 22nd, 2010. I want to say is the actual date of the pizza transaction. So that's why we still have a zero return stream for Bitcoin. Ethereum index is the orange line with the orange hue, trade coming in at 916% rounding down. Hex index is the pink line with the pink hue coming in at 5,340% rounding up. And then we have the T-shares index, which is the pink line with the yellow hue coming in at 9,073% return since inception, with respect to the data that I have here, minus 16 days. So this is just phenomenal returns for the first 457 days of the existence of a complete financial product with no marketing, with no actual marketing, right? Taking into consideration the fact that the crypto industry completely attempts to hide the existence of Hex for obvious reasons. So that's just something to keep in mind. Hex is it's just amazing. Even when we're seeing a dip, it is still outperforming everything out of the gate. So I just love to highlight that every time I go over this chart. It's very important to understand because we're only at the beginning of this network. When you're an early adopter, you always get supremely rewarded. It's just a function of whether you have the discipline to hold on or not that makes the difference. Here we have the Hex post big payday chart, and as you guys can see, we're 118 days post big payday. The first halving index is the orange line, the second halving index is the blue line, the third halving index is the green line, and the big payday for Hex, post big payday index for Hex, is the magenta line. And as we can see, the first halving index has a 602% return, and now we have the second halving index at 106% return rounding up, and third halving index at 118% rounding up. And let me say this again: the first halving index 603 rounding up, and the Hex big payday, post big payday at 233% rounding up. Now, here's something I would like to highlight real quick. It's important to note that the majority of the inflation that came out for the Bitcoin system occurred during the first halving. The second most was for the second halving. Oh, and I forgot to put, sorry about that, guys. I forgot to put my usual. Let me do that right now for you folks, because I do have the data open and it will take just a second to fix this. Just because I like people to see exactly where Hex is with respect to all of the halvings. I just think it's important to know where we are and understand where we are going, because folks, we are going. There's no doubt about it. Again, Hex has market product fit. It belongs, and it's just supposed to exist. It's not so much a function of, oh, Richard Hart is the man and I own it or anything like that. It's just a simple fact of the matter. And there you go. So currently, the first halving, we're behind by 63%, but we are ahead the second and third halvings by 111 and 90% respectively. Now, the thing to understand is that all of the natural inflation that was going to come out of the Hex system has already come out. So if the biggest inflation for Bitcoin came out at the initial halving, and Hex has already had its only, one and only, well, I think you know what I'm trying to say here. Full speed ahead, Captain. Look north, because that's where we're going. All right, now we have the T-share to Ethereum chart and the T-share to Bitcoin chart. And this is a lot of people's favorite chart for obvious reason. We're showing how the value of the T-share is maintained consistently throughout time, regardless of what the other markets do. So it's very important to understand that this chart helps you understand the value proposition in Hex, there being that it's always there regardless. It's just a matter of your discipline and when you pick up that value. And this is why timing the market is hard and staking is supreme, because it kind of ensures that even if you don't have 20,000 T-shares, the system is helping you generate more T-shares in reality. It's just a matter of you staking accordingly in order to see that to some degree, right? Because even though the system does reduce the quantity of T-shares you can attain in the future, that's merely a function of what you're experiencing with respect to inflation and deflation within the system, but you're already benefiting from that by staking. So are you really? Right? It just depends how you look at it. Are you looking at it in terms of Bitcoin? Are you looking at it in terms of Ethereum? Or are you looking at it in terms of Hex? Now, personally, I look at things in terms of Hex. So as long as you're getting more Hex, you can't be losing. You're always winning, because Hex always allows you to earn more Hex if you stake it. So this is the value proposition that neither Ethereum nor Bitcoin can lay a claim to, but Hex can, thereby consistently generating that value proposition that will continue to attract newcomers. Moving right along, we have the Hexpate Metrics here, and as we can see up at the top of the legend, we have the daily payout, which is the dark pink line, and then we have the total T-shares, which is the orange line, and then we have the payout per T-share, which is the magenta line, and the daily payout is at 63.683 million. Give me a second, because I just remembered that I did. It's the chart that's messed up. Okay. Just give me a second, guys. Just want to make sure this data is appropriate when displayed in here. Yeah, I didn't think so. 10.8, okay. So yeah, so the system, sorry for keeping you guys in the dark while I was looking at an Excel spreadsheet. But the important thing to understand is that you're really at the beginning stages of something that nobody understands, nobody can comprehend, and nobody really wants to comprehend. So that puts you at a supreme first mover advantage. The only difference here is that it's a global one. And this is kind of what I wanted to get into on Quant Gang stream last night, but it was just so much going on, so much excitement that we just couldn't dive in and tackle everything. So I'll be getting into that in my next stream. But just look at the system, look at what it does for stakeholders. The system is there to benefit you, clearly. And this chart highlights it even the most. Have the total T-shares index in orange, the daily payout index in magenta, and the payout per T-share sum index in dark pink. Now, this line is the big daddy, right? This line lets you know how much return you've received in payout per T-share since inception if you were staked and had at least one T-share. Very important. This is just one T-share. So this is how Hex is able to generate life-changing gains without having to sacrifice your private keys. Very important to understand. You're staked, you get this, you get a piece of this, right? Because the important thing to understand about this metric is that it's unique to each staker and how long they're in or not in the system. So if you've been in the system this whole time, you've benefited from this whole return stream because this is what the system is going to do regardless. Now, I personally entered right before Big Payday, and that was like around day 327. So I've been benefiting from the system, not in a full T-share capacity because I did not understand it at the time. So we could probably say right around before Big Payday, I definitely did start benefiting from the system in terms of payout per T-shirt sums. So given that I've had at least one T-share prior to Big Payday, I've seen at least 60,000% in terms of the sum index, right? Because this is again cataloging each and every single instance across time. So you can literally take each stream and sum it up, and that's an actual value because that's just how the math happens to work out. So the daily payout index is again showing you how the system is there to help the staker, the shareholder in the system at 11,510% rounding up. The total T-share index is 2,170% rounding down. And this is just letting you know what's going on with the total staking pool, the activity in it. And as we can see at Big Payday, the total T-share pool was ratcheted all the way to the top for the most part, right? We had almost what looks like 50,000 total T-shares roundabout. And I do close up in this chart here, and that's about right. A little over 50 million. Sorry, not 50,000, but 50 million T-shares at this point in time, right before the Big Payday. And the Big Payday essentially pushed all. Well, first of all, it created all these T-shares, and it was a strategic move by the OA to not allow the short-term operators within the hex market to essentially destroy it by fudding out because they simply didn't understand what it was about. How do we know this? Because we have charts that dictate up and to the right all the time. So clearly they didn't understand. Nothing further to discuss there. So this is the chart that contains the payout per T-share index, the payout per T-share sum, and the hex index. Now the payout per T-share sum line is the orange line, and this line is letting you know that you received 1,657 hex rounding down if you've been staked since inception with at least one T-share. That's phenomenal. 1,657 hex just for one T-share. I mean, nowadays, right, you need to have quite a few T-shares to generate that amount of hex. And of course, yes, it's been over 1,500 days, right? But I'm sorry, not 1,500 days, 457 days. But if you do the number of total hex paid out divided by the number of days, that's a little over 3 hex a day that you're getting on average since inception, which is phenomenal, right? That's phenomenal because in the future, that's the equivalent of 3 hex for owning one. Because again, the T-share is merely undervalued because it's the first days of the system. It's very important to understand that. This is why first adopters get rewarded. The ultimate is going to be when we can look at hex as a one single unit and not as a cross rate with anything else, because it is important to understand that hex is going to ultimately be the value basis for a lot of systems. It's impossible to understand now, but when something has an actual value proposition, something that consistently maintains its value, it's like gold, right? Gold is the denomination for a lot of things for a specific reason, and that's because it's been around forever. So what happens if our world continues to vaporize like it's been for the past 20 years? Well, that's an interesting question, an interesting thing to ponder, right? And unless something better than hex comes along, I think it's fairly easy to think that the future is Hex's future, because like I'll explain in a future stream, the Hex system is really the foundation for any economic system, and I'll break that down in the future. But the Hex index is at, again, 5,340% rounding up. The payout per T-share index is at 531% rounding up, and this is just showing how payout per T-share has increased fivefold since inception. Moving right along here, we have the T-share rate versus the APY. And the T-share is currently at 17,051.2 hex, and APY as of yesterday is at 38.22. Phenomenal APY for the average staking length, which is at currently 5.29, I think it is. Let's see. Yep, 5.29 years, which is phenomenal. And this just lends credence to the official status of Hex's protocol, and just how much belief there is and understanding there is. It's not so much belief, but more so understanding of the system and how phenomenal it is, and the fact that it just always works, right? If you've staked short during any time within the first 480 days or 470 days of this product's existence, you know that Hex works. It's not a doubt in your mind. You've already staked and ended staked, so you know. And here we have the T-share dollar value chart versus the T-share rate chart. And again, what I'm highlighting in this chart is not the actual T-share rate that the system is generating. We know that's a static line, and that line always goes up. What I'm showing here is, with respect to the dollar, how the value is changing. Because again, the T-share rate is merely the Hex dollar value divided by, is that the Hex? Hold on, let me see something. I have it up here. Yeah, it's the T-share dollar value divided by the Hex dollar value. Only in quantities of 10,000. So for here, there's only a single Hex is being accounted for, hence why the number is 17,000. So if you look at here, it's the T-share dollar value divided by the 10,000 Hex dollar value. That's what gives you your T-share rate. And this is why those values are just a fraction of each other. Okay? So in essence, what this line is letting you know is, when there's a dip, it's an opportune time to buy your Hex and get your T-shares, because you're going to get more than the system is actually giving you. You're addressing a scenario in which you're finding something that's undervalued and addressing it. So again, you're paying less than what you're getting for when you understand the dynamics between the T-share rate and the dollar value, or the T-share dollar value and the Hex dollar value, because that's essentially what's going on here. I'd just like to highlight that. And this chart, the cost of 10,000 Hex, lets you know clearly. And I like to talk about this chart a lot, because ultimately what I think is that while this chart gives us let me see something. Interesting. While this chart gives us the T-share rate in its natural form, these two items, right, you can't see them on this chart, but these two items are telling a story. And the story they're telling is a story that you get from this one line. It's just giving it to you in detail. So what it's letting you know is that Hex right now is cheaper than Hex is going to be in the future. That's literally what this story is telling you, what this image is telling you. So if you're able to address that in an astute fashion and take advantage of an undervalued scenario for Hex, you're going to benefit long term in a significant way. Now, this is everybody's favorite charts. Expiring shares all time. And this is a snapshot in time as of 5 days ago from last night. And what I want to highlight is just how the stakes here are ended and removed, and then you see a stake pop up there. You're going to see this stake basically end up here. So just keep an eye on the chart as I scroll back and forth. I'm going to do it various times so that it can be visible to anybody that views this video in the future. So as we can see here, there was a stake and it's gone. So where did it go? Right here, right? We have no stake here, stake there, no stake here. 311. We have a stake here, no stake down here. And this is the future. This is 10 years from this point in time, from this current point in time. So when you go to 5 days ahead, this is as of 311, and this is as of last night, 316, we see that the stake finally is out of the system and has been moved over here. So this just highlights what's going to come further in the future, and all of these big stakes ending, all of these stakes ending are just pumpamentals across time. And the bigger the magnitude, the bigger the potential price move. And this is why these charts are so important to understand and look at. It's really letting you know what's going to come from the system. It's just merely a matter of understanding the ROI and whether it's going to affect the T-share rate not only across time but also across the returns that the system generates based on the staking length. And moving on to the BTC, or to the all-time Hex versus Ethereum and Bitcoin correlation chart. The first one is Hex versus Ethereum, and as I always like to highlight, the Hex returns are the x-axis, and as you can see, they're positively skewed because the return streams are always on the right side of the zero axis, or the zero for the x-axis, which is the Hex return stream axis, and then you have Ethereum returns, which are on the y-axis, which are more spread out, as you can see. Not as tight of a group as you would like to see for your return stream. This is a lot of volatility, whereas with Hex, the volatility is strictly, for the most part, majority skewed to the positive side. And no, I'm not going to get into that. And then here we have Hex versus Bitcoin. Let me highlight that the correlation is 0 for Hex versus Ethereum. And now we're entering a potential error. Now, this has only been a couple of days where the slope is negative for the correlation between Hex and Ethereum. This is important. I just want to highlight it's important to watch because what could ultimately mean there is that Hex starts to outperform Ethereum, which is kind of hard to imagine, but not impossible to foresee. Because again, as we all know, Hex really does stand alone. And here we have Hex versus Bitcoin. Here we can see that the slope is slightly negative as well, and the correlation is 0. And just like versus Ethereum, the return streams for Hex are on the positive side, and the return streams for Bitcoin are very varied. Even if we know it goes up over time, there is a lot of pain with holding Bitcoin. None so much with Hex. And this is just if you're holding liquid. If you're staked, then you have nothing to worry about because you're always getting compensated for holding Hex, and you never feel any pain. And that's just a reality. And this is the payout per T-share chart, and the payout per T-share is highlighted in pink. The adjusted Hex price is highlighted in yellow, and the Hex price is in orange. Now, the adjusted Hex price is the sum of the payout per T-share and the Hex price. And the reason being is because you get paid for one T-share every day, this sum. So if you're staked with at least one T-share, right, that is the most valuable aspect of the Hex ecosystem. And the reality is that ultimately Hex is going to become so valuable because of the payout per T-share. Will it ever reach the value of a T-share? Hard to say. I don't personally think so because the T-share is always outpacing Hex. It doesn't mean it can't get close to it, but is that the actual value of Hex? I don't know. It's very hard to say at this point in time. It really depends on what happens with the T-shares themselves, and it's just, I don't know. That's a hard one. That's one to definitely debate and ponder. Not something for this short clip of a video. So yeah, as you guys can see, as of last night, Hex was 1.16 cents. Right now, it's 1.17 and a half. So a meager little move up higher from this point in time, but higher nonetheless. Payout per T-share last night was 6.8 cents, rounding up. giving us a total adjusted hex price of 7.95 cents, which is almost 8 cents, which is great. And it seems to typically be the upper bound recently. So if we surpass this level here shortly, we might get a similar move like we got last April, which would be great because why not? I know everybody's waiting for it. I know I am. And here we have the hex price to earnings. Again, this is as a view of a one-to-one relation between hex and what you get for owning hex, right? We want to consider hex as a standalone, not as a cross rate with anything else, because there is nothing else that works like hex. So in reality, when you're getting when you own one hex and you're getting paid out for holding one T share, right? That's the goal. The goal is to own enough hex to get paid out, right? So if you own one hex and you're getting paid out, eventually that payout is just, this is really like a dollar reference, right? Because even though we're looking at this system in hex terms, the reality is that you're converting from fiat to hex, right? So this is why it's hard to talk about this, because in a lot of ways it doesn't actually make sense, but it's something that people need to understand, because what we're doing is we're traversing from one system to the other. So it's not like you're really trying to maintain that bridge, right? There's a reason crypto exists, and that's really to evade what we've been under for a while. So this is value that you're getting with every dollar that you're laying down in Hex. And when you're getting paid out 6T shares, it's kind of hard to disagree with the value being there, because you're immediately magnifying your returns with respect to how many T shares you own. And as always, we end with the classic S&P 500 earnings ratio chart, and this is as of February 1st. And I mean, this is at 39, 38 here. Who cares, right? The lowest point in time was 5.51, and as we saw, Hex PE is 0.17 as of yesterday, or as of last night. So we got a long way to go, guys. Thanks for tuning in. Have a good one.